Happy FOMC day. We're going live today. That weird motion I just did, some notification came up. Why are we doing today's video live? Well, we've got the iPad right here. I don't use monitors, I use iPads. And I'm looking at the market, and the market is green. However, I don't think this is the correct move. We've seen this before. We know, we now have experience, we now have history. When there's a lot of focus on FOMC meetings, normally there's not, because they're normally not combating inflation. There's not this hardcore, public focus on the Fed, on the markets, like there has been, less so in the past, whatever it is. They are extremely volatile. And I've found that when there's a lot of focus on the market, a lot of just eyes, a lot of tension, the bias is actually towards the upside, towards activity, towards buying, lots of buy orders and, just a few sell orders that just come in. Because if you're going to sell, you probably already sold. If you're going to buy, you're always going to buy. You're always happy to buy if prices are good. If you're going to sell, you already sold. Anyways, I want to talk about the move today because it's still green. I'm not concerned. I've seen way crazier than this. I remember the May meeting last year. We were up, some 2%. And the next day, after the presser, and the next day we were down massively. I got burned on that play. Still ended up finishing last year over 120%. Anyways, I think it's, I'm trying to I'm not trying to look at the market. I haven't really been focusing on what the market's doing. Like I said, we know it's volatile. I want to stick to the dots, and I want to connect the dots. And coincidentally, one of the dots we have to connect is the dot plot. And the dot plot is a big increase from the last dot plot, which was a big increase from the previous dot plot. And yet, interest rates peaked in October of last year. And Powell addressed this quite head on and said, we have to go back to where rates were before, where expectations were before. He said March, because the 2-year was the highest in March, but it's arguable that the longer end should have been higher at that time. We'll see. There are new concerns on the longer end. Regardless, we're not trying to predict the longer end. It's very difficult to predict. We're trying to predict the 2-year, because if you look at the dot plot, the 2-year needs to be much higher. They are penciling in or predicting at least another 2 hikes this year with, as Powell described, quite a dramatic fall in core inflation. So if inflation falls at a very swift rate, they'll hike 2 more times. And that means, in my opinion, my calculations say that the 2-year needs to be at least 5%. And right now it's at 4.7%. Not a huge move. Might not affect the markets, but I just want to articulate the fact that I don't think the move is over. I think it's clear that a 2-year move has to occur. It's basically flat so far today, despite the Fed's forecast. I think that is indicating some sort of market bullishness, some sort of market dovishness still out there. And I don't think that was what the Fed delivered today. So we're going to see what happens with regards to that. But I have a quote from Powell that I want to discuss. Here, Gunlock saying the Fed is overstating the inflation risk at the moment. The Fed's the Fed. If you want to fight the Fed, you are welcome to do so. I will not be doing that. Anyways, the quote from Powell. I put this because he's kind of leaned it into the word inflation, but I put the word inflation has not reacted much to our rate hikes. So we're going to have to keep at it. That's very different from the market sentiment, which says, and was saying just a few hours ago, the battle is over, the Fed's going to pause, they're not going to come back to pausing, CPI is going to have a 3 handle on it next month, they're done. That's not what the Fed delivered, okay? That's not what the Fed delivered. The Fed just said, Powell himself just said, the inflation has not reacted much to our hikes, so we're going to have to keep at it. That's very different That's very different than where market sentiment is. Don't hate the player, hate the game. That's the truth. Why does he say that? Well, he says that because he's looking at core inflation, which so far this year has not moved, has actually increased from where it was towards the end of last year on a month-on-month basis. Year-on-year basis, yes, is down, but we know the effects of base effects. Anyways, I see some people hopping in the live. If you got any questions, we're here to answer questions. That's why we're doing live today. Not putting any pressure on you to ask questions, but we know the market is doing one thing and the Fed is indicating another. And we've seen this happen before. And until we see it in the bond market, and some time has gone by, we're not going to be fully convinced that the situation is fully changed. Anyways, that Powell quote about inflation seeing very little progress despite all the rate hikes so far it's notable. That is very different from the market narrative, from the market sentiment, from the market dialogue. And that's the Fed. So you don't want to fight the Fed. You've never wanted to do that in the long run. The market's been doing it all year, but I expect that, sometime after 30 minutes after the press conference, when things start to settle, when people digest the information, rewatch the meeting, hopefully, and forecast things with the new, will we see a catalyst to trigger the bond market, or will it adjust as data turns? That's a very good point, or a very good question. I do think that there will be both catalysts, and just time will force the bond market to move. What catalyst do I see? Well, of course, I see additional Fed speak later this week, and I think more follow-up on what Powell said will cause rates to react. We know rates tend to react when Fed members speak, and we've got a jobs report tomorrow, I believe. If that jobs report comes in hot, is not showing significant continuation of the labor market cooling, maybe people will reevaluate the data more holistically. So I think we just have to give it time. We've seen this before. We've seen last year, the May meeting, the market was up over 2% at this point after the press conference and was down even more the next day. So things can get crazy. There's a lot of focus. There's a lot of tension. There's a lot of activity in this market right now. I think the thing we need is just let the situation play out. We know the Fed has decided to be more hawkish. We know that Powell just said inflation has not reacted much to our rate hikes, so we're going to have to keep at it. These are the facts. These are the fundamentals. The market choosing to be at all-time highs in a select few stocks that have negative notes coming out. The UBS note, very good data, very good surveys of consumers doing real work, coming to real conclusions with real earnings forecasts, and that stock being at all-time highs with what the Fed is saying here, I think is a little misguided, a little misplaced. We just got to give it time. The market's not going to react in a day. It's going to take some time for this to play out. So I do think there will be catalysts towards the end of this week, the remainder of this week, and probably something next week. I'm sure there's going to be plenty of Fed follow-up here. We only had 4 Fed members after the hotter-than-expected PCE, which showed a reacceleration both on year and month-on-month. 2 of them were quite hawkish. 2 of them signaled a pause. We got the pause, but we got 2 more rate hikes projected. That's quite a lot. And it wasn't just a few members that did that. There were only 2 members who said they want to keep rates here. Everybody else was at least 1 more, and plenty who said 2, 3, and 1 who said 4. So the trend has been continuing to get more hawkish. I'm not saying that they're going to get more hawkish. I don't want to go there. I'm just saying the trend has been that. And we have Powell saying inflation has not reacted much to our rate hikes, so we're going to have to keep at it. And we have a market sentiment that was all bulled up on the idea of a pause, maybe possibly expecting a 50-50 chance of a July hike, but clear market exuberance, virtual record call to put ratio buying, a very low VIX implying very low downside protection buying. You have a very very fragile and overly complacent market right now. And I think the Fed just delivered a shock that it needs. It's going to probably, it looks, take more than an hour for it to react fully. But let's just stay calm. Let's stay patient. Let's play a little more long term. And let's see what happens. So that's today's video. That's my thinking. I appreciate a few of you coming in, asking questions. That was great. And feel free to leave questions in the comments at any time. My DMs are always open. Thoughts on Mr. Market? I think Mr. Market is being a little irrational here. You're seeing a market that was at least exuberant on the idea of a Fed pause, of a Fed pivot, of expecting no additional hikes, bullish sentiment, earnings already troughed, and you're getting a Fed that is expecting 1% GDP for this year. But if Q1 GDP was strong, some 2%, like 1.9% or something, let's look, yeah, we're going to stay live for now. Let's look at what Q1 US GDP was. 1.3%. This quarter is probably going to be positive GDP again, probably around 1%. In order for the Fed to get its targeted GDP rate of 1% for the year, it's going to need weakening in the second half of the year. So the earnings decline that has already occurred despite the continual increase in GDP is likely to continue to grow as Gunlock just said S&P 500 really overvalued. Bond King, by the way. GDP is likely to go negative in the second half of the year. If the Fed is expecting at 1%, Q1 was 1.3%, Q2 is projected to be, at least Atlanta Fed GDP, somewhere around 1%. We're going to have to see some negative GDP in the second half of this year in order to see that big inflation decline. The Fed is not doing this action on the idea of a modest inflation decline. They're seeing a big PCE decline. That was Powell's characterization of it, a big PCE decline. And we're not seeing yet a core inflation slowdown. That's not what's happening. That's what he said as well. He said despite all this hiking, we're not really seeing a slowdown yet. So they're expecting the best possible situation here. I'm not trying to say they're going to do additional hikes. What I'm trying to say is don't fight this man anymore. Don't doubt him. That's what the market's been doing so far this year. That's why we've gotten to an 82 on the fear-greed index. That's why we have record call-to-put ratios. That's why we have a VIX at the lowest levels since right before the coronavirus downturn when we were at all-time highs despite China shutting down its entire economy, Apple saying it wasn't going to meet revenue guidance, etc., etc., etc. So things are going to happen. Thoughts on Musk versus Trump? Here's what I'll say about Musk versus Trump. I actually heard Mike Pence today, this morning. And Trump is the guy. He is the founder of the MAGA movement. And he is the greatest president we've ever had. I say that with absolute confidence, absolute certainty. You just look at what's happened since he left office. I'm not trying to overhype him or stir emotions in any sort of way. That is Trump. Trump was a top G. But I heard Mike Pence today. I get it. I didn't really like what he had to say about Trump not wanting to defend Trump today in his current, prosecution case. But he did make a good counter case, which was Hillary Clinton's done way worse with the email servers. But I do like Mike Pence. I do. I'm not ready to solidify it yet, but Mike Pence could be my guy. And I think him and Trump align on many issues, but there's certain things that I think Mike Pence can really, he might be a little scared, and that maybe that's not a good thing. I'm not saying he's going to unify the people or any of that woo-woo stuff. What I'm saying is I think he can really, if Trump founded the MAGA movement, I think Mike Pence can continue the MAGA movement in a very real way. He's a very based, Christian man who's a good person, very committed to his values, and can likely pull in a lot of people. and really change American culture for the better. So I think he's an interesting option. I haven't fully committed to him on that. I like Elon Musk. I love Donald Trump, and I love Elon Musk. I'm very interested in Pence right now, though. I thought today his interview with CNBC was pretty damn good, minus one or two things he said that I didn't like. So without further ado, without further questions, that's today's video. I appreciate everyone tuning in. Don't forget to like and subscribe, and keep the questions coming. We're happy to answer them. Maybe we'll do some more lives after this. So that's today's video. And until DeSantis versus Trump, DeSantis is okay. He's good. But he's got a very important job right now, converting a once swing state into a very conservative stronghold for many important people like Donald Trump. I don't see why he needs to run to challenge Donald Trump and leave his post. So for that reason, I'm out. He's a good guy, though. I like his politics. So that's today's video. And until next time, appreciate you coming out. AA, I wonder who you are, but I think I might know. So thank you for coming out. Until next time, peace out.